Shopify is positioning itself to be the only e-commerce software that companies need to build an empire. The company's revenue has been increasing significantly. The company has billions in cash, and management has shown itself to be good financial managers. Today, we will check out Shopify Stock Price Prediction 2021. Number 6. What is Shopify and how does it work? The e-commerce platform provider helps small businesses to set up shop online and build their brands. Big Commerce, Big C, a new IPO, is a close competitor, but tech stalwarts Microsoft, MSFT, Adobe, ADBE, and Facebook, FB, have also made a push to provide e-commerce solutions for businesses. 2020 was a great year for Shopify investors, mainly due to the COVID pandemic presenting a need for e-commerce. Investors had very bullish sentiment surrounding stocks in this industry, which led to huge gains in share price over the past year. Shopify turned a profit for the first time this past year and has shown great revenue growth. Once they got a firm handle on this pandemic, the degree of which shoppers will go back to their bricks and mortar shopping ways remains to be seen. However, this is a potential headwind Shopify investors need to factor into their models right now. Number 5. Shopify Stock Technical Analysis. Shopify stock cleared a $1,285.28 buy point off a base-on-base pattern February 5th, according to MarketSmith chart analysis. The breakout follows a massive rally over the past 2 years, which could entail higher risk. Plus, the market is increasingly extended, a warning sign. Stocks also tend to be volatile ahead of earnings, with Shopify due next week. As of February 12th, Shop stock was far extended from its entry, meaning shares are not in buy range. Shares are well above the 50-day line after finding support at that key level in late January. The relative strength line rallied for most of 2019 and 2020 and is now at new highs. Shopify stock earns a best possible composite rating of 99. The rating combines key fundamental and technical metrics in a single score. The e-commerce software company has an 86 RS rating. That means it's outperformed 86% of all stocks over the past year. The accumulation distribution rating of A- reflects heavy buying of Shop shares by institutions over the past 13 weeks. The software stock has strong institutional backing. Number 4. Stock Price Prediction. Zacks estimates call for Shop's adjusted fourth quarter earnings to soar 188% on 78% stronger sales. Overall, the FY20 revenue is projected to jump 80% to reach $2.85 billion, with its EPS figure expected to skyrocket from 30 cents to $3.71 a share. Clearly, it would be nearly impossible to post the same amount of growth in 2021. Nonetheless, Shopify's 2021 revenue is projected to climb 30% or $840 million above our FY20 estimates to reach $3.69 billion. And Shop's FY20 and FY21 consensus earnings estimates have both climbed roughly 50% since its third quarter financial release in late October. Shopify boasts that it helps power more than 1 million brands around the world. Investors should also know that the e-commerce market has miles of runway left, as it accounted for roughly 14% of total retail sales in the third quarter, down from a record 16% in quarter 2. This is up from 11% in the year-ago period. Yet some might have expected the figure to be higher, considering the near-perfect conditions to outperform. Clearly, the run might make some investors nervous that it has come too far too fast. That said, its run has been less hyperbolic than e-commerce firm Etsy and pandemic high flyer Zoom Video, ZM, up 330% and 500%, respectively in 2020. And on the valuation side, Shop trades at a 20% discount to its own year-long highs in terms of forward 12-month sales despite trading at new records. Number 3. Shop earnings and fundamentals. The EPS rating compares a company's earnings growth to other companies, and its SMR rating measures sales growth, profit margins, and return on equity. Last October, the e-commerce software leader crushed earnings and revenue estimates for the third quarter. Shopify earnings of $1.13 a share contrasted with a net loss per share a year ago. Revenue jumped 96%. Wall Street expects a 181% earnings jump to $1.21 a share, with revenue up 80%, $906 million and 82 cents. Shopify merchants had sales of $5.1 billion over Black Friday and Cyber Monday. Shopify earnings are likely to fall 2% per share in 2021 after soaring 1,130% in 2020, according to Zacks Investment Research. Revenue growth is likely to slow to 32% in 2021 from 81% in 2020. Over the past 3 quarters, Shopify grew earnings at a 552% average clip, well above the 3-year average of 101%. Investors should generally look for stocks with sustained earnings and sales growth of at least 25%. So Shop stock is far ahead of both counts. The hot software stock lags several peers with a low 5.8% pre-tax profit margin, an IBD stock checkup tool shows. Its 1.3% return on equity is well under the minimum 17% or higher that investors would want to see. 15 analysts have a buy rating on Shop stock, 11 have a hold, and 1 has a sell per Zacks. Number 2. Shopify stock risks. Jeff Bezos of Amazon is reportedly working on an online store format that could theoretically compete with Shopify. If so, Amazon could offer significant competition to Shopify. The pandemic has been the catalyst for Shopify's increase in revenue. Some worry that the increase in revenue will taper as the pandemic clears away. An alternate view taken by Shopify as well as Logitech, LOGI, is that the pandemic simply accelerated a process that would have occurred anyway. Since Shopify does not chase revenue, it is possible that the company will have another unprofitable quarter. If so, traders and investors may well sell, making the stock price drop in the short term. Number 1. Is Shopify stock a buy right now? A concept stock. Every time it doubled, he took profits. Doing great as an e-commerce platform, moving internationally. Trading at 28 times price to book. Price to sales is 70 times. If you want to buy, start a half position. When it doubles, please take half off the table. Today, it's at $1,800. Last March, it was $400. Shopify ticks off many of the boxes that investors should be looking for. The software company boasts huge earnings and sales growth, which got a boost from the pandemic. Analysts expect its torrid pace of growth to slow in 2021 after Shopify warned of near-term uncertainty. From a technical viewpoint, Shop stock is not in a proper buying zone after breaking past a $1,285.28 buy point. Shopify stock is not a buy right now. There also is little time to build a profit cushion before the upcoming Shopify earnings report. For now, it's best kept on a watch list. Other large cap stocks to buy right now may also offer proper breakouts as well as the potential for solid rewards. Assuming that management continues to show it as savvy as it has been and continues to show a profit, there is good reason to believe that the stock price will continue to increase, even if not at the same rate it has been increasing. The price, nevertheless, should continue to be choppy, as it has been for the last 2 years. It seems wise to wait for a dip or a pullback to buy from its current level. I believe that 2021 will not be a good year for Shopify stock, and investors should take advantage of a correction by buying the dip. I do believe that Shopify is a strong company that will see extremely high growth over the long term, but the company's valuation suggests that most of that growth is already priced into the stock. Therefore, I give the stock a bearish rating over the short term, but respect its long-term opportunity. Do let us know in the comment what you think of Shopify stock. Please subscribe to the Stock Advisor. Thanks for watching.